chart here. All right, so let's take a look at I'm looking at the May 23rd. Okay, I'm gonna show you the Asian session highs, session lows, and the London session highs, session lows. Okay, so the red arrow lines are going to represent the Asian session low, Asian session high. This is the London session high, and all right, guys. I know a lot of you guys have inquired about the chart templates and workspace environment. I posted a video yesterday on it. If you haven't watched that video, you can go back and watch it. But I just want to do a quick little insert in this video here just to explain to you that the chart templates and workspace for which I trade around, and what you see in my trading platform, or I lay out whatever case is with the 60 to 24, the 12 and the 4 also have a 36 and range chart and the daily chart. Okay, so the 6 templates or chart templates involved or incorporated into the workspace environment that you can basically download and today and kind of be using the same environment or use the same environment as chart templates. So basically, I'm giving you it's a downloadable or executable file where you can download the chart templates and start using them today. I also included the volume profile templates in there. If you choose to purchase the range volume profile from discotrading.com, I believe, and I just found out yesterday that I believe the discotrading.com, which I'm just kind of privy to it or hearing about it, for some reason they have suspended the order processing at this time. I'm not 100% sure why, but I had the the range volume profile and been using it for years now. So it continues to work, I guess, for all those that have currently have purchased the indicator, whatever the case is. I purchased it like 8 years ago, whatever the case is. So I'm sure their servers are still up and running just fine when it comes to pre-existing orders. So they may be down right now for whatever reason, but I did send a message out to their support team to kind of inquire why there's suspension of their order processing at this time on their e-commerce side. So either way, the chart templates are mine, the workspace is mine, so you can still, all that's included, even the volume profile templates, in case, whenever they get their start processing orders again, that you'll have the volume profile templates to load if you purchase the range volume profile in the future. But the chart templates and workspace environment on NinjaTrader 8 or for NinjaTrader 8, you can download today and install them, and it will upload to your machine just fine. Now, what I'm also going to do is down in the description of this video here, I will link to you the cumulative delta indicator that I use, as well as a little price line you see going across the my screens. I'll show it to you right quick. A little dotted price line right there that kind of just runs horizontal across the screen. I'm going to include the links to both of those. The cumulative delta indicator, which is free, that I found from a third-party provider that I use, and I have that loaded to my 12 range chart, and the price line indicator, which is also free. I'll put links to those both in the description portion of this video as well. All right. So if you haven't already, purchased the chart templates and workspace environment, I will include a link to that, a link to the area or the site where you can purchase it, download it. It's a very minimal expense, guys. So I'll link that down in the description part of this video below to where you can click on it and purchase the workspace environment, which includes all the chart templates. And I'm running that just through a limited time through the end of this week coming up, which is Friday, June the 3rd. Once that expires, that link will no longer be valid, guys, and the chart templates and workspace will no longer be available. So keep that in mind. June 3rd is the last day if you're looking to purchase the chart templates and workspace environment that you see me trade around each and every day, guys. So, all right. So that's going to do it as part of this portion of the video. And I believe one other thing I wanted to share with everyone is also that I did create a Discord for the group. I'll show it to you. We have quite a few members that have already, signed up for it, which thank everyone who's currently joined the Discord already. This is a community that I've set up for fellow like-minded traders that where we can share information, share ideas, and things like that. Basically, so that you guys can kind of converse amongst one another and share ideas, regardless of what future markets that you trade, whether it's the micros or the E-minis. Doesn't matter. You guys can share ideas with other fellow traders in the community. All right, so that's going to be it. Stay tuned. Go ahead and watch the rest of the video because the rest of the video is packed with some very good content and valuable information that I'm sure that will answer a lot of you guys' questions that are still kind of, maybe you're an intermediate or beginner style trader, that this video pretty much surrounds or talks about the topic, or me discussing the topic more so about supply and demand. All right. Hey guys, welcome back to the channel. This is Future Trader with Mike, and I appreciate everyone who's tuning in to watch the video today. Today is Sunday, the 29th of May, guys. Okay, it is Memorial Day weekend. Tomorrow's Memorial Day, but I wanted to put a video up covering a little bit more topic about supply and demand, trading setups, and even possibly look at some areas of what I classify as areas of liquidity. Seems that a lot of people have interest in this topic, and the reason being is because they don't particularly know too much about supply and demand, meaning they don't really know how to trade it. A lot of people do trading what's called based around break and retest, and to me that is not the most profitable areas and zones to be trading from, and it's a higher risk of possibility of getting stopped out, carried with just trading break and retest. So break and retest are just based on prices, say if we're moving to the upside, prices pushing higher, making a high, pulling back, making a higher low, and then breaking up, making a higher high. So people would, on the test of that high, on the pullback, they would try to go long, and lots of times that could be just an area of liquidity in the market where the market pulls back to and test that, prior area high, or that high, the prior high, and then the market will turn back around to push maybe slightly higher, and then the market will turn, fold, stop you out, and then move back in your direction. So I've shown that in a few videos, talking about break and retest, why not to take those type of trades, because they do carry a higher risk versus particularly looking at trying to trade in supply and demand zones, because in supply and demand you are actually getting in at the right price, I should say, because I think one of the biggest keys that people take away from the market is they trade based upon what you see, which is fine, but you have to be smart and trade based upon not only what you see, but what how the bigger players in the market are actually trading. Because I say this over and over, and those that really know how to trade, and if you're a newbie here and you're a beginner, maybe this will kind of clarify things for you. We want to trade like the market makers. We want to trade like the big players in the market, the institutions, the banks, and so hedge fund companies and things like that. The big players in the market that are injecting money into the market, big dollars. Because retail traders, we don't have the kind of capital to push and pull the market. So we wanted to. It's like a game of chess. We want to play with them and move like them, if you understand that. So they have little tricks and games they play to take your money, and you have to know what they're doing at all times. And that's why I trade supply and demand, because if I'm looking to buy, then I'm getting it at the most, I'm gonna say cheapest price, but at the best price when the move started. So there was a accumulation of buyers or accumulation in the area where price was accumulation. Aggressive buying took place at within a swing, say for instance. And you can see that if you look at your charts, you can see where a lot of buying came out of a particular area, say a swing, nice swing to the upside, or a lot of selling came out of the area to the downside. So we want to trade, if we're buying, we want to get into where the area of that swing where the aggressive buying took place at the original point, or the origination of that point. And the same thing in the selling. We want to sell when price is high, buy when price is low. So that's why I always say, buy the lows, sell the highs, So we'll look at some examples, and then look at probably some examples of liquidity as well, because liquidity can be many places in the market. It could be at prior session highs, prior session lows. It could be with prices breaking structure, and meaning breaking retest an area. A lot of people trade those type of things. A lot of people would trade the prior session, say a prior session high, and that could be a session high or low from the Asian session, the London session, or the U.S. session, the New York session. Okay, so I'll try to point those things out, and I'll probably start. We'll start taking a look at things based upon supply and demand trading on using the setups, of how to really actually what to look for when you're trading supply and demand. Okay, and I have my 24 range chart up here, and we'll look through some areas here. I don't have any zones marked off, so I'm kind of playing it off the cuff here and just kind of identifying some areas where price could be, more so looking for areas where there's maybe, say for instance, demand or supply in the market, whatever the case is. So we'll look at what was Friday's day? Friday was the 27th. So I'm just gonna look at the 25th right here because it's right in front of me on my face here, right in front of my face. So if I look at the 25th, say for instance, as the market was here, pushing up, breaking higher, pulling back, and breaking higher here. So we have a swing to the upside, okay? As an example, price pushes up, pulls back, breaks higher, okay? So as price pushes up here, all right, what does it do? It turns, starts making structure to the downside, then it pivots and then starts breaking structure back to the upside, okay? So as it's chopping to the upside, making higher highs and higher lows, it makes a high here, pulls back low here, and then makes a higher high here. So we have a swing, right? Okay, let's move this video recording now because it's getting in the way there. And so we have something like this, price pulls up, pulls back, and then breaks higher, right? On this pullback here, we have swings to the downside, right? Where price is just pulling back, making lower lows and lower highs, right? Then it pivots, makes a move back to the upside, right? Making higher highs and higher lows. But what is it doing on the move to the upside? On the move to the upside, it's basically breaking structure. So it's what I call making and breaking structure. It's making structure, meaning making higher highs and higher lows, but it's breaking structure as well. The structure where it pulled back, making lower lows and lower highs to the downside. Prices start making these higher highs and higher lows to the upside, taking out areas over here, right? So when we see that happening on a big swing like this to the upside, what we want to look for is price basically to pull back to an area of demand. Now, what happens is a lot of people what they do is they get trapped into a trade. I'm going to show you this, okay? I'm going to identify a couple of areas where you could possibly got into this to the trading, okay, which you should be able to clearly already see. All right, so when price started making these higher highs and higher lows, it pulls back, right? So it takes this area here out, this swing here out, and it takes this swing here out, okay, where price made a low, lower high, lower low, lower high, and then it comes down, makes a low here, and prints a low, and then starts making a move to the upside, okay? We're taking out structure and making structure. So as price is making structure to the upside, what was it doing? Swung up, pull back. Here's resistance, pulls back, breaks the resistance, making a new high. Pulls back, breaks the resistance, making a new high up here, okay? So it took out area here, it took out area here. Now, supply, not supply. In this case, we're looking for areas of demand, say for instance, okay? So I'm gonna go ahead and mark the zones, what I would be looking for areas to pull back within. And the first one, when price made a high up here after taking out this area of resistance, this would be on a pullback right here. I will be looking for price to, let's see, okay, right here. This would be the area where I draw my demand zone, okay? Reason being because this is the this swing here, pushing to the upside, pulling back, and then breaking higher, okay? Started breaking into this swing and taking out this area of structure right here, okay? Meaning the swing to the downside. So the demand zone, to me, is always going to be the last, how I look at it is the last candle. When price made a swing to the upside, pulled back, the last candle, full body candle that close to the downside, the red candle, top to bottom of that candle. Draw it, and then mark your zone here, start from the top to the bottom of that red candle, and draw it out. Now, price pulls back to it, okay? You see it, it taps in, maybe one tick away, depending on how I drew the zone. Maybe one tick away. One tick away, I'm definitely counting that, okay, guys? All right? But let me show you where people make the actual mistake at. All right, price closes to the upside, taking out the structure here, okay? Now, most people get into a trade the moment price pulls back to this little swing right here, okay? All right? The moment it pulls back, meaning it's pushed up, pulled back, and breaks higher, meaning it's breaking structure, okay? The moment it pulls back to this little structure, they're going long, okay? And I'm not saying you won't pick up a few ticks because you probably could. And there's even a possibility price may push up higher from there, but the higher probability of what I call high probability demand trade here, okay, is not taking the pullback right at the break and retest. Okay, a break and retest is most times going to be a failure. So when price pulls back to this area right here, you go long. What happens? Price pushes up a few ticks, and then it starts chopping to the downside. Liquidity is sitting right here. Okay, all right. So as price is making higher highs and higher lows, breaking structure over here to the upside. The market makers know. The market makers know. People are going to when price pulls back. Okay, they're going to tap into right here at the top end of this area here, resistance, whatever the case is. They're going to go long, okay? And they're going to stop you out. Take your money and keep it pushing lower, okay? So they can gravitate and get into a better area in the market where there's a better price at, which is the demand zone. So price pulls back to this area right here. When it pulls back to this area, this is the area I'm looking to go long at, okay? All right. Now I know we have resistance right above us up here, okay? All right. There's a swing to the downside. We have resistance right here. All right, but if I get in right here and the candle closes green to the upside, I definitely can take the trade from here, which will be the close of this candle, this green candle right here, all right, which is at 39.50. Say for instance, I can take it from there back up to this area right here, okay, which is resistance pretty much. And if you take it at, what did I say, 39.50, back up to this area here, guys, that could be anywhere between 5, 6, or 7 points right there. Okay, that is the how profitable you know supply and demand style trading is. That's how successful you can be waiting for price to pull back, getting to a better price on a demand move like this right here. Price pulls back to. Okay, now do not. To me, it's up to you. I'm not saying take a break and retest. You won't be successful in doing that. But the higher probability, I look at things from a lower probability standpoint to a higher probability. Me looking at things, the higher probability is going to be when price pulls back to an area of supply or demand. In this case, we're looking at an example of demand here, okay? So another option would be if price pulls back to this area right here, okay? Let's see. Give me 1 second. Let's see. Price push up. I personally would like to see price pull back to this area right here. Bottom top of the red candle right there. Okay? Oops. Take a look at it again. Okay, so let me actually redraw this because price, when it came down here, it pushed up, broke back, made a little high right here. Okay? And closed that green candle right here. Okay? So this will be the demand zone right here. All right? The price tapped into it. Yes, it did. So when price comes here, right here, I'm long here, okay? It pulls back, pushes lower. Did it come hit into the demand zone? No, it did not, okay? But what it did do was pushed up, finally taps into it. So at the close of this green candle here, this is where you go long at, okay? So as you can see, price taps into that demand zone, and then it goes up, right? Okay, so it goes up, taps into it, pushes up, testing back up the high up here, okay? So that's how you trade the demand, supply and demand trading setup pretty much, or setups. But it's an example of demand trading, okay? So we'll look at another area here, and then we'll cover some areas, talk about liquidity, which I just showed you an example of liquidity right here. If when price pushed up here, it pulled back, broke higher, okay? Pulls back, testing this area right here, okay? This is resistance, guys. Typically, liquidity is going to be right at an area of support or resistance. In this case, this is an area of resistance. Most traders will take the trade on the pullback, okay? Right here, in an area excuse me, I'm sorry, not resistance, support. Not resistance, I'm sorry. Support in this case here. Price pulls back to an area of support right here, okay? The moment price pulls back, they'll go along here, okay? And what happens is that the market makers are going to stop you out. Why? Because, like I just said, at most areas of supply, at support and resistance, basically break and retest style trading, that's what we're in the area where there's going to be liquidity at, okay? Reason being, because the institutions, the market makers, they know the ones that are driving, the driving force really of the market, the players at hand, they know that most traders are going to get in right here, okay? When they do, all right, they know there's money put into the market right there, okay? All right, the market will push up a little bit. They're going to flip the market around, grab your money, push the market lower, get into a better price, and then eventually, when they tap into an area of demand, say for instance, this area or this area down here. Say for instance, at some point the market's going to flip and they're going to move the market back in the intended direction of what you were looking for taking a trade based on. So you were looking to go long right here, right? Okay, they stop you out here. They drive the market just a little bit lower, flushing out or hitting shopping for individuals or traders stops. And when they do that, they turn the market back around just to push it higher. Okay, and so the market eventually intends it goes in your intended direction. But the thing is, they flush traders out of the market, hitting their stops, grabbing money, and then pushing the market back around. Okay, or turning the market back around and moving it back in the same position. So you were trying to go long here. All right, they stopped you out, pushed the market lower. They end up putting on uh, buying long positions, and then the market goes back into the to the up position, okay, or goes, starts moving higher and higher, okay. And that's pretty much how it works there, okay. So we'll look at some more examples here. So like I was saying, if you get in on this entry right here, you capitalize on this move to the upside all the way back up to the high right here, guys. So that's a nice profit. So that's why supply and demand is so much profitable when trading, and the probability is higher, okay, of gaining more profit, whatever the case is. So it just depends on how the market's moving though. But like I said, this is off a 24 range chart, and we'll look for another example now. Okay, here's an example of another demand setup I'll show you here. This is from the setup actually started forming on the 24th. Again, it's a 24 range chart. It's a higher time frame chart. But the actual move wasn't where you could actually get into it didn't happen until the 25th pretty much. So this is the higher time frame chart. So the 24. Okay, so if we look at the move here to the upside, let's see if I can move this down a little bit. Okay, so right here, price pushes up here, pulls back. Okay, breaks higher. Okay, now the area where price actually pulls back into the area of demand, I'm going to show it to you right here. Okay, we'll go ahead and mark that zone. The zone is going to be pretty much in this area right here. Okay, so let's double check that. Price pushes up, pulls back, breaks higher, taking out this area of structure right here. Okay, so as it pushes higher, makes a high, pulls back, higher low, makes a higher high. Within this swing to the upside, we do have supporting swings. So this swing is what's called a supporting swing within a swing. Oops, didn't mean to draw it through that. Right here, it's a high here, price pulls back. So the supporting swing within a swing, okay, if you can see it. Bigger swing to the, I'll tell you what, let's let me get rid of this here. Let's see, what was I doing? Okay, oops, get rid of that. Here's a swing to the upside, okay. Let me get rid of this. And we'll just draw it. High, low, okay. Well, this was the high right here, okay. So this is the high, low, and then higher high, okay. Price pulls back. The area is going to be right here, right here. Now we're talking about it didn't fully 100% tap into it. Okay, so here we go. Let's see, 1350. It's basically 2 points away almost. This is on a higher time frame, so I would actually include that or count that. But what you really want to see it do is really tap into this area. So that's kind of discretional. Would I take it? Yes, I would take it. Me, I would. But I would recommend you guys, if you're a beginner trader, kind of wait till price gets into the zone here and take that. But it is kind of a marked up demand zone there. Price pulls back. You could go long at the close of pretty much this green candle here. But that's kind of I guess a tricky situation there. But if you did go long here, you capitalize on it, take price back up to the high right here. So that's trade off of demand zone. But like I said, this is off of a higher time frame chart, the 24 range. So we'll look for another area, but that was a pullback to an area of demand there. Okay, so let's look. Okay, so here's an area of demand here too. Same day, 24th. Okay, If you see it down here in the bottom, down here, price pushes, makes a low here, pulls back, um, higher low, excuse me, lower high, and then makes a low here. Okay, so what does it do in turn? Okay, turns back around, high, low, higher high. Okay, it does it. It starts breaking into the structure here. Okay, trying to take the structure out. All right, on the pullback. Okay, pullback is right here. Okay, price pulls back to this area. This is the demand zone, the last red candle to the downside. Okay, rectangle, draw from top to bottom. Okay, right there. Price pulls back, close to the green candle above the box, you go long. Okay, back into the high. So pretty much you get in at 81.75 or 81 and a half, and take it back up here to 88. Again, this is the 24 range chart now. Okay, that's 5, 6, 7 points right there. So that you can pick up. All right, that's trading off of a higher time frame chart. Okay, and that's why sometimes you see me trade on a 12 range chart. I'm still trading. You know, you could trade off of either. You know, some people trade like say a 5-minute chart, whatever the case is. They follow the direction of the market off a 1-hour chart, and then they'll start scaling back and looking at a 5-minute chart, or some people may trade a 15-minute chart, whatever the case is. It just depends on your time preference or chart style. You know, whatever chart you're going to trade from. You know, whatever you trade. If you trade tick style charts, range, volume, whatever it is you trade from. Okay, you could trade. You know, it's just that. Just be mindful if you're trading off of higher time frame charts. The market is going to have some push and pull, meaning that you may get into a trade and then it starts to pull back against you, whatever the case is, to where you can incur a lot of drawdown, whatever the case is, because you're trading from a higher time frame chart, and within a higher time frame chart, there are like so many different levels. So many levels could be within, you know, a 30-minute candle or a 15-minute candle or even a 5-minute candle. It just depends. You know, there could be little. That's why I have a 4-range chart that I look at from time to time to see, you know, even the smaller what I call micro levels in between. Okay, but this is an area of demand sitting right here. Okay, all right. So that was another area of demand. Let's see if we can possibly find maybe an area of supply. All right, so here's an example of, let's say, an area of supply, say for instance. Okay, all right. So this is from the May 19th, say for instance. Okay, price is chopping to the downside, making higher, lower highs and lower highs and lower lows. Okay, all right. So it's low, lower high, boom, lower low, lower high, lower low. Okay, then it turns around. Okay, so on the move to the downside, price is making structure to the downside. It's making a breaking structure to the downside, meaning it's making a low here. This low here is support, lower high, pushing down, breaking through support, which now support is resistance, making a low, lower high, lower low. Turns around. Okay, all right. Must have hit some area of support to the left hand side of the chart, which I can't really see. Yes, support down here. There's a low here. Okay, all right. So what happens in turn is that price now it starts to make higher highs and higher lows. But what it's doing is it's pulling back to an area of resistance, say, okay? Resistance. So within this area of resistance, to move to the downside, okay, which was a low, lower high, a low, lower high, a low, okay? All right, so we look for price to pull back to some area within this area of resistance and look for an area of supply, okay? So as prices are making structure to the downside, all right, of course, this is the swing right here, okay? All right, this is the swing. Within this swing, what do we have? We have supporting swings, smaller swings. Here, here, down, up. We have little smaller swings, right? Okay, so those are called supporting swings. Within those areas of swings, we can look for a price to maybe pause at some particular area and look for a little area of supply, guys. Okay, so let me kind of take some of this off because it may to the eye look a little confusing. So we'll look for an area. You see the price pulls back, right? All right, so this here, I'll show you. Okay, go ahead and get my little rectangle. Price pulls back. Okay, this here is an area of supply. You mark it from the top end of this green candle, last green candle on the pullback to the upside. Okay, I'm explaining it to you. Right here, see that green candle right there? Price pushes down, pulls back. There's no green candle above it that closes to the upside, breaking above this green candle. Top, bottom of that green candle pretty much, okay? So let's kind of redraw that little box a little bit right there. All right, price pulls back to it, retraces back to it. Right here, close of that red candle pretty much. Let me draw the zone a little better. Okay. All right. So close of that red candle right there, I'm going short. The only problem is that when I'm short right there, once I go short right there, okay, is that I have area of support right below, but I still can capitalize on that, you know. Right here, close of the candle right here at 14.5. I can take this trade on down to say 39.07. That's 7 points pretty much, guys. You know, so you could again 5, 6, 7 points off that trade. I mean, even picking up a couple points, guys, it's good. Okay, that's why you wait for price to pull back to the area of supply and demand, because you're getting into a trade at the higher point of price, looking to sell. Okay, all right. So you're trading more like the institutions are trading. You're trading more like the market makers are trading. You know, not just taking trades right at support or resistance. Okay, I'm going to show you where resistance would be at in this case. So some traders would, price pushes down, pulls back, breaks lower, boom, pulls back right here at resistance. They'll get into a trade somewhere in here. Okay, all right. You may pick up a few points here, a couple ticks, but what happens? Market pushes down, flips, boom, stops you out. Liquidity is right here, okay, in this area, okay. That's why in most break and retest or most areas of support and resistance, it can be considered as areas of liquidity, because the market makers know that people are going to put positions on. In this case here, they're going to look to go when price pulls back to resistance. They're going to look to sell. The moment they sell, they'll get you and let you think that the market is moving in your direction. They'll flip it, stop you out, push the market a little bit higher, okay? Get into a higher price at an area of supply, okay? And boom, the market goes in the same intended direction of what you were trying to go, or it goes short, you know? It turns back around, goes south, and it's moving in the same direction of what you wanted the market to go into. So always look for the better price areas. So when I say going short, look for supply. You can, because you're going to get into the trade when the market makers are, you're basically riding the coattails of the market makers, guys. You know, think like the institutions, how they actually trade. The bigger players are in, the ones that have the big money in the market. We want to trade like them. We want to grab their coattail and trade just like them, because we get in at better price levels. Understand that. That's the key to it. Take the sell here, go short, okay? So try to stay away from trading just at support and resistance, because most times, to me, those areas are lower probability areas of success. I'm not saying that may not work out sometimes, because there's plenty of times it does, but just try to, because if you get into areas like that and trade off a break and retest of areas, like this is a break and retest. Price pushes down, pulls back, breaks lower, meaning breaks through this area of support. Now which was support is now resistance on the pullback right here. Boom, price pulls back to this area of now resistance. When you get into a trade, you get a little bit, market flips up, stops you out, breaks higher, okay? If you try to weather the storm here, weather the storm right here, and didn't, didn't get it out when the market pulled back against you, then you took some major drawdown, okay? All right, then you may, if you got that kind of size account, when the market starts to short here or sell off here, you're basically going to break even. Okay, so wait to get into a better price where you know where the market makers are going to sell at, or the institutions are going to sell at. Right here, you sell here. Why? Because this is where the origination point, where most of the selling took place at. Okay, market sold here, pulls back, a little buying took place, and then all the selling took place here, tucked back within the swing. Okay, so wait for price to get back to where the selling started at, not right here, where you kind of capped at the bottom end of the swing and it sold off a little more. Get in where it starts at, okay? Always think about that. Look at your charts, figure out where is the buying starting at, where is the selling starting at, and wait for the price to pull back or retrace to those areas, okay? So that's how you trade around supply and demand, and that's why it's so much more profitable, and you can be more successful in trading, waiting for setups. And that's the biggest thing, is being patient. You guys see that you have to be disciplined in trading and wait and have patience, wait for price to come back to those zones, okay? And that's why you see me every single day. I scalp it, I'm able to profit from it, because I'm waiting patiently for price to pull back, supply or demand. Okay. Um, you know, most areas of, like I said, break and retest of support and just support and resistance, those are going to be, to me, they're considered as areas of liquidity because the market makers are waiting for you to get into that trade as support. The moment you do, they let you make a little bit, they flip it, stop you out, and then they run the market a little lower if they're trying to the market is if they're trying to get to a long position, they push the market to a better price, a cheaper price area just to put get into the market and turn the market back around to go north. Okay, same, and it works in reverse when you're actually selling. Okay, and I want to say one other thing too. There are session highs and session lows. I mentioned this in the beginning of the video. You have the Asian market session highs and lows. You have the European or London market, which typically opens at 3 in the morning, 3 a.m. depending on what region of the across the country you live in. But you have London session highs and session lows. Okay, sometimes the market, most times the market is going to, especially when we get to the New York opening session, it's either going to it's going to test the session highs from a whatever trading market, whatever the case is. So let's take a look at that right quick. I'll just kind of show that to you. We'll look at the 24 range chart here. All right, so let's take a look at I'm looking at the May 23rd. Okay, I'm going to show you the Asian session highs, session lows, and the London session highs, session lows. Okay, so the red arrow lines are going to represent the Asian session low, Asian session high. This is the London session high and London session low right here. Okay, so what we're looking for most times, what's going to happen is during the New York session, once the stock exchange opens at 9:30 Eastern time, there's liquidity sitting in these areas that typically what you'll see is the market will either test a prior, market session high or low, which is say the London session high or session low, take it out, flip around, and then start moving in, the opposite direction, whatever the case is. Well, let me show you an example. Okay, here we go. All right, so I just mentioned the session high, session lows here. Okay, all right, so the U.S. market opens around this area right here. Okay, so it's kind of moving sideways right here. Start chopping, moving sideways, right? Okay, but eventually what happens here is you see Asian low, okay, the session low, all right, and then you see the London session low right here. What happens? Okay, the reason why there's liquidity sitting in these areas is because there's money resting there to where traders started putting on buy positions here, okay, to go long, okay. All right, so eventually the market in the U.S. session pushes down. Boom, what does it do? It's testing the lows from the London session and the Asian session, right? And what does it do? It takes out the lows where traders were looking to place long positions at, stops them out. There's money resting here. They stop them out. They trap traders pretty much. They stop them out, and then what happens? They turn the market around and start moving the market right back north again. Okay, so it's just tactics and strategies they use. Okay, and then the same thing here. There's liquidity sitting up here, but in this case here, they actually go up there. Okay, they actually go up there and they keep running the market north. Okay, so the market didn't flip when it got up here to the session highs right here, but in this case right here, sometimes they'll break right through the session highs, guys, and just keep the market moving in the same direction. Like there was a high here, pull back, and then they retested this area here from the prior market sessions, meaning not the U.S. session, but other sessions globally, like the Asian or the London session, and the market kept pushing higher. Okay, all right. But in this case right here, you'll see this. You can a lot of times you can capitalize on moves like this, and you wait for them because always keep in mind Asian session highs, Asian session lows, London session highs, London session lows. Like I just marked right here and showed you the prime example right here: Asian session low, London session low. What happened about an hour after the market opened up? A little bit before an hour, pretty much a half an hour after the market opened up. It came down here and tested the Asian and London session lows, took it out by a few points. Market flips back around, okay, and stop all those traders out, grab that money, liquidity resting right here, just to push the market back up again. In the same direction as these traders were moving to the upside, they stop them out just to push the market back higher, just to collect that money. And that's how the market moves. And you have to think like the market makers, think like the bigger players at hand, institutions. Guys, that's all I have for you today. I'm going to wrap it up here. hopefully you guys understand about more about supply and demand style trading, looking for the setups, how to trade the strategy, so and how you can become profitable scalping the same way I do each and every day, looking for supply and demand setups. Okay. All right. We'll wrap it up, guys. See you on Tuesday morning. Tomorrow, I won't be doing anything, of course, because the market's closed because of Memorial Day. But wish everyone a safe and fun weekend. If you're spending time with your family or your loved ones, so hopefully you guys are appreciating some time off. Okay.